Okay, traders, let's get right to it. It's Friday evening, and we have got a whole lot of stuff to cover this evening. Man, it was a really good week. We've got a lot of things to show you, a lot of different things played out. And the first thing I want to go right into is we know it as the double your portfolio strategy. This is the crude iron condor strategy that we're trading exclusively with the intentions of doubling our money in the year. So we started trading this back August 15th. That's when we started trading it. We have a very specific money management algorithm that we adhere to, that we use to guide us for the number of contracts to trade in order to try to get to that 100% return for the year. And I got to tell you, we just closed out the trade today that we had been in, trade number 4. Yeah, just highlight that for you. So trade number 4, we had an iron condor in crude. We opened it up on September 25th. We closed it out today on the 14th of October. We were in it for 19 days. Max buying power, we had to make some adjustments in there. So the most I used was 22,000 of the roughly $30,000. So we were pushing it on adjustments, but I still had still was in control. I still had plenty of flexibility. I could reduce that buying power at any time had I gotten into a bind, and that's what you want to make sure of. Is you can trade like this, but you have to leave yourself an out. It's like driving overseas in these wild west type settings in cities. Man, you have got to leave yourself an out. So you got to do the same thing when you're trading at this level right here. So we racked up $2,560 in the trade for 19 days. Ended up with a total number of contracts, 32 contracts. So our net profit, $25.12 for 19 days in the trade. That pushed us, our cumulative profits, to $76.91 since August 15th. So almost $7,700. We're up 30% so far, and we're in month number 2, August, September, October. I mean, we're in the second month of this thing. We're already at 30%, guys. So now is when that money management algorithm starts kicking in. In our portfolio right now, you know, you can just add, I'll start adding a well, I mean, we've got $32,691 in the account right now. So we're just continuing to let that algorithm work its magic, and we just sit back and be mechanical in our trades. So that's what this is all about. You know, at the rate this is going, I'm sure we're going to get a glitch at some point in time. That's just the way it is, but we have to be mechanical and trade through it. So we're going to get the gravy while the gravy is good. Alright, that's the first thing we wanted to look at. Oh, hey, sorry guys, I should have maximized this for you. Yeah, let me make that just a little bit bigger. I'll highlight it right quick. Trade number 4. That way you can see it a little bit better. Sorry for scrunching it up. $2,560 gross profit, $25.12 net profit after commissions for 19 days in the trade. Cumulative profits so far $76.91. We started trading 15 August. We're in it for 2 months. $32,691 is what we're up to now in the account, and we're up 30%. All right, let's move on to the second thing we need to look at. All right, this is what it looked like. This is the trade, what it looked like this morning. Just wanted to show you a picture, just a graph. Now, yeah, I could have probably held on to this thing for possibly another $2,000. That's reckless trading, and that's not what I'm trying to accomplish here. So we trade this just like we do in our real accounts. So there's no, just because this is a paper account doesn't mean that we take unnecessary risks. You have to trade the paper accounts the same way you trade your regular accounts, and that's what we do here. So again, I started peeling this thing off this morning. We were only a couple of days to go, but you know, had I been able to watch this thing minute by minute, you know, maybe I could have pulled another $2,000 out of it. Who knows? I'm happy with what we've got. So we're going to move on to the next item. Alright, now we're into checking the trades, the status of our trades that we have right now, open positions in all of our accounts. So let's take a look at the Iron Condor in my retirement account. You know, we put this thing on a couple of days ago, 2 days ago to be exact, on October 12th. Here are all the trade stats. I just want to bring to your attention $2 days into the trade, we're up 330 bucks. Our linear profit loss graph says that if we're above this number, we're okay to take it off. Hey, look guys, 2 days into the trade and we're closing in on the 25% profit target. Now this is when, you know, we get another favorable theta bump in this thing, or collapse. Hey, we could be taking this thing off and then reloading it again. So that's the name of the game. If we really beat this thing to the 25% level badly, yeah, I'm going to take it off and reload it. Alright, so nothing to do here. We're just going to watch this baby cook and stew, and let's move on to the next trade. Okay, this is the most recent broken wing butterfly I put on in my retirement account. Put it on October 12th. Nothing really to report on here. Here are all the trade stats. Let's bump this up a little bit. You can see here very flat theta line in these broken wing butterflies, so we can get a lot of movement and not see any drawdown nor profit increase. Again, in these trades, I'm just going to let them go. I'm not worried about the downside because we're still in a very bullish environment, guys. I don't care what happens. Maybe we get some volatility because of the presidential election that's coming up, but you know, this market's going to resolve itself to the upside. It's going to take something very, very strange to derail it, because the way it's trading, we just haven't hit that magical run up where everybody jumps into the stock market. Everybody that owns a little shop, all the mom and pops, we're not there yet. So so my play on these broken wing butterflies, let them cook and stew. If they wallow around back here in the lottery ticket area, then we'll pull them off at the 25% profit target zone. If they run up on us 30 days before expiration, I'll put a call spread on here and turn it into a quasi Iron Condor. So that's our play. But on this one, nothing to do. Let's move to the next one. Okay, this is the broken wing butterfly in my retirement account that I put on, let's see, oops, sorry, I'm not paying attention, 16 days ago. So we've been in this trade for 16 days. Really nice picture here. We're up 495. Yeah, we've got to have a lot of theta decay and be in the sweet spot to ever beat the linear P&L graph on the broken wing butterflies. We're using these in a different manner, so we won't pay too much attention to this. This is just primarily for our strangles, for our Iron Condors, any debit or credit spreads that we might have. Alright, so nothing to do here. We just let this baby cook. It is looking fine. Let's move to the next trade. Okay, really interesting today or yesterday in the S&P 500. I'll show you when I get to the charts when we look at how our levels held up for the week. But yesterday we had the S&P that had a piercing down move. It went down through the first level on the downside, hit the point where we needed to hedge. My hedges were triggered, and it immediately rocketed higher after that. So once my hedges are triggered, then for all you guys following me, what I do is I trade the deltas at that point. So I'm just delta trading. But when you get a market that just goes, when the S&P hits the hedge and then in this environment makes a 30 handle move to the upside, it's hard to stay ahead of the deltas in this thing. I did the best I could, came out really well. I could have closed the trade out for a loss this week, but I don't want to because I like the position I'm in. We're only down right now going into the close, I think a little bit less than 1% for the week, but the trade's still open. I'm not calling this week a loss because the trade's still open. So here's what I did. Alright, let's go back over to this side here. Pay attention. Again, this is all because the S&P 500 pierced the lower level, hit our hedge point. Our hedge is triggered, did exactly what it was supposed to do, but then, just like it does 80% of the time, it turns about and runs directly against the other way. But it ran hard against me this time. So here's what I did. Original position, I sold the 2100 puts. After the hedges were triggered, about an hour and a half, 2 hours later, I was selling 2110 puts. This morning, I sold a boatload of 2115 puts against the position. So all in all, this week, oh yeah, and I'm short 3 ES futures from the 2110 level. I think I'm in a pretty good position in these things because I just think the market looks like we're going to get a little pullback. I know it's hard to believe, but you know, we might get a little bit more to the downside. So all in all, this week, all the profit, all the premium I collected, $1,735. I had max profit on. I'll let everything go to expiration. So we pocketed $1,735. I sold 3 more of the 2110 puts against my short futures, collected $937. So we're going to let that, see how that trade plays out. Now I'm carrying this trade over into next week. You know, if we get a down move in the market, this could be a potential home run trade. I mean, a veritable home run trade for this strategy. And I got to tell you, in a normal market, guys, this is how I've hit home runs. Trading steady, two-sided markets. When you have to roll, you have to go into another week. You know, if you're mechanical and you're trading the deltas, and eventually you're going to get the move you need. I mean, this crazy market right here will string you out to the upside for, we've seen 4 months. You know, a couple of times this year we've seen 4-month runs where it never turns back. But in a normal market, when you're able to trade like this, my biggest wins always came from positions that I rolled over, that I continued to be mechanical on, continued to sell premium against, and I always came out far ahead with far more profits than if I had just been trading the strategy week in, week out. So I've got a lot of hope that I'm just going to stay mechanical, keep selling against this position, and try to work this one out into a home run. So even though I'm holding this position through next week, this does not impact Monday morning. I will sell another strangle against the S&P 500 Monday morning. So that's ooh, that buying power is wrong. It's 15,000. Let me change that right quick. Okay, there we go. Alright, let's save that. Alright, so here's what my trade looked like this morning. I just wanted to show you a picture. Wasn't worried about it at all. That was right before, let's see. No, I had sold the puts against it this morning. So that's what we look like. I just kind of figured, even though the market was strong, I had some levels where it looked like it would turn away from. I was suspicious of that up move. Came out of nowhere this morning, just straight up, just like they always do when they're game playing in this market. So, and this is what the trade looks like going into next week. So I have short futures and short puts on, and I can turn this into a straddle very easily. I'm going to wait and see how we open up Sunday night and get into Monday morning and go from there. So very hopeful that this is going to turn into a home run for me. So anyway, that's how that trade turned out. Now let's move into the next. Alright, here we go with our crude trade in my personal account. We put this trade on October 3rd with 44 days to go. There's now 33 days to go. So we've been in the trade for 11 days. Right now we have a $1,300 profit, and our linear P&L graph says that we're okay to take this trade off. We are ahead of the 25% level. So right here we're at the 25% time. If you'll notice, those two numbers match. So we're 25% into this trade and we're ahead. So we could easily take this thing off if we wanted to. I like where we're at, so I'm going to wait and reassess a little bit longer. You know, I'll take it off automatically at the 50% mark. But I want to reassess right now. I like this position. Okay, so that's where we stand there. No action here. We're looking really good. Alright, so let's see what else we've got to talk about. Yeah, let's go right into our let me see. Yeah, weekly levels. That's not what I'm looking for. Okay, give me just a second, guys. Let me pull up. There we go. Okay. Now let's see. Make sure you guys can see that good. Let's zoom in a little bit. Okay, perfect. All right, as you can see right here, highest level to the upside, lowest level to the upside. Okay, we came down, we pierced the first level, ran right through it, cut through it like hot butter, and we hit our hedge point. So our hedge is automatically triggered in. So there's a reason why I hedged there. This time it just didn't work out the way I wanted it to, because it ratcheted a lot higher very quickly. Went roughly 30 some points straight up before it settled back down today. We have those hedges on for a reason. The back testing I've done shows that when it hits this hedge, this hedge area to the downside, there is a very good probability that it's going to cut through this one to the downside here as well. So we want to just protect ourselves. And once we got hedged, then and we rallied up hard. I mean, it moved up very quickly off those levels. That's when I started adjusting the trade by the deltas. So all of you that are following me that go through the class, you know exactly what I'm referring to. You pull out the delta sheet and just try to keep the deltas, as close. We make very, very incremental adjustments, just trying to keep our deltas in line, not trying to get back to delta neutral, but just keeping them close enough so that if we do have that snap back again, we're not going to get crushed back down to the downside once again. So anyway, that's where we stand there. But the S&P, the levels held for the week. All right. Let's see here. Ooh, that's what I want right there, guys. Okay. All right, bonds. Ooh, man. Hold on just a second. You'd think I've never ever done this before. There we go. Hey, forgive me that misspelling right there. Bonds still look heavy, and that's good for the long puts. You guys know we were buying puts back up into this area because we just didn't believe. We thought that was such a crazy move up that there was no reason bonds should have been up in this area right here. So this is where we were buying those puts in TLT. I just really regret we didn't load it up a lot more. I thought we were going to get another push back up here into this area, but we just never did. So I know all the bond guys were banking on this thing going a lot higher, but what do they know? Honestly, guys, nobody knows anything. Everybody gets crazy around extremes. Everybody does. So anyway, bonds held in their between their levels for the week, so our levels worked out good. Okay, crude held between the levels for the week. That one worked out well also. So again, these blue lines here, you can't see the one to the upside, but that's the current position I'm in my crude strangle in my personal account. All right, the dollar, man, the dollar is just taking off. That thing was wound so tight for so long, trading in that range right there. When she broke out, she did it with gusto. Cracked through the first level to the upside, but held steady to the second level right there. All right, gold, you know, we had that monster down move last week. So we cracked through the first and second levels to the downside. Gold this week held, never touched any of our levels. This was last Friday, guys. So Monday, Tuesday, Wednesday, Thursday, Friday. Our levels held perfectly for the week. Nothing challenged. Yeah, here's TLT. You know, this is the area where we started. Right in here, up in here is where we were buying puts on the TLT. This is a weekly chart, guys. So just look at this thing, man. I mean, this is where everybody was getting crazy. You know, just all kinds of reports coming out from all the bond guys about just silly stuff. And like I said, everybody loses their mind around extremes. So this was all-time lows in interest rates, this area right here. This is our area where I wanted us to really lay in heavy and buy the puts. We just never ever got back there. We banged up against it, but we never got there, and bonds have collapsed. Now they're on the downside, bottom side of this channel, so I really thought we'd rally back up and kiss the top of that channel. That's still a probability. So I'll be lowering the area where we buy leap put options in this TLT, you know, once we get back up to the upside in this channel here. So, but that's right, calling all bond kings. Where are they? Yeah, they're out looking for their hind ends because they know what's coming. And unfortunately, the people in mutual funds that invest in bond mutual funds, they're in for a slaughter. Long-term bond holders are in for a slaughter. They'll probably never get their money back. They'll have to wait 30 years, you know, to get into the next cycle, which will take another 30 years to play out. So this is a look at 30-year interest rates. So again, you know, I keep writing that if I was long bonds down in this area right here, I would really be scared. Well, hey, if I was a bond fund manager, I would, sorry guys, yeah, I'd be looking for a residence in Mexico, because I think the bond mutual fund holders are just going to get fleeced by supposedly some of the smartest guys in the business. So we know to steer clear of stuff like that. We know that the next trade over next 30 years is going to be on higher rates. Yeah, I don't think they're going to explode higher anytime soon, but we know that we could have very well seen the low in interest rates back here. Could have been it. Hey, I think that's it, guys, for Friday evening. Let me check and see if there's anything else that I've... yeah, there was one thing. You know, there sure was. One thing. The weekly levels. Let's go over that right there. So, you know, we've been tracking these real time and for past 14 weeks. I have decades of data that corroborate everything we're seeing unfold in the real-time markets. And of course, you guys know I'm putting these trades on real-time in my account as well. So these are the weekly. This is where I sell the strangles against those weekly levels in the S&P 500. But we track all these 5 markets right here just to see how they play out. Alright, so we're looking right here, and this is the percentage of time for how often these underlyings closed inside of those levels for the week. So you remember those levels I show you on the charts, the first level, second level. So 92% of the time the S&P 500 closes inside those first levels. Okay, 92% of the time it closes inside the second level. Look at the bonds. Bonds are very volatile around that first level. They only close inside the first level 57% of the time. But the bonds have never, not yet in 14 weeks, have they closed beyond the second level. Pretty interesting. Look at crude. As volatile as crude is, in the last 14 weeks, it hasn't closed beyond that second level. Alright, so that's how to read that right there. That's how markets look. And this is just tells me how many times what the percentage of times is that these markets actually touch those levels. So that just gives us an indication of how jumpy these markets are. So crude and bonds are really the most volatile around that first level. But you can see bonds are still very, very very steady around the second levels. And look at the dollar. Yeah, the dollar hasn't touched the second level yet. So anyway, that's a look at the stats for these trades that we look at, our weekly levels. And that's a wrap for tonight. So again, just to recap, hey, our double it up portfolio in the crude is at equity highs. Also, I didn't show it, but our $1 million portfolio is at equity highs as well. So our model portfolios are just they're gangbusters. My retirement account is up very, very nicely. I mean, we're above 20% right now since May. We just started trading that account again since May because of a lot of things that are going on here the first few months of the year. So now we're refocused again. So this is just how good this stuff works out and plays out, guys. So just have faith in it. Keep being mechanical. Use what we've covered time and time again, on Tuesday nights. Nothing ever changes. Nothing will. There are no other secrets. It's just a math game. And don't forget, you're playing with real money. So hey, you guys have a nice weekend, and we will be talking to you Sunday night when we're going to be looking at some new trades. All right, have a good weekend.